Hello, my name is Kevin Day. This is my cyber insurance discussion number 3 video. This video was part of my Introduction to Information Assurance graduate course at Metropolitan State University in St. Paul, Minnesota. This video content has been made available for informational and educational purposes only. Cyber insurance is a type of standalone coverage product an entity can purchase to help protect businesses and individual users from the financial risks associated with doing business online due to a security breach, network outage, or service interruption. In exchange for a monthly or quarterly fee, the insurance policy transfers some of the risk to the insurer. Originating in errors and omissions insurance, a separate form of insurance that protects against frauds and defects in the services a company provides, and it is comparable to product liability policies for companies that sell physical or digital products. Cyber insurance policies are sold by many of the same suppliers that provide related business insurance, such as errors and omissions insurance, business liability insurance, commercial property insurance. Cybercrime is a criminal activity carried out by means of computers or the internet and is becoming a common occurrence for companies. Cyber insurance can help cover the data recovery costs of cleaning up after a breach and can be incredibly steep and cost many companies millions. Types of liability coverage. There are two types of cyber liability coverage, the first being first party coverage, which covers financial loss incurred directly by the business, such as a loss of income during a shutdown or after data breach. The precise coverage and liability varies by provider and policy. Some coverage may include lost income from business interruption, the cost of repairing hardware and software, extortion money required by a hacker, loss of transfer funds, public relation costs, loss from corrupted or stolen electronic data, reputation management expenses after a cyber attack. The other is third party coverage. This coverage covers losses resulting from other people affected by the cybersecurity incident, such as a customer suing a business after identity theft. However, this is mostly designed for legal claims. Coverage may include fines and fees from regulatory organizations, negligent claims, network privacy and liability claims, breach of contract claims, libel, slander, or defamation, copyright infringement, or other media libel claims. One such cyber incident a cyber insurance may cover would be a ransomware attack. This is a classification of malware that infects a device and then encrypts and/or prevents a device from being used until a ransom is paid. This is different from other malware. That is, a ransom is demanded by the attacker for the removal of the malware or decryption key. There are four main types of ransomware. The first is crypto, which encrypts files and data within a system, making the content inaccessible without a decryption key. Leakware, which threatens to distribute sensitive data online to incur panic and payment. Lockers, where users are locked out of a system, files and applications are inaccessible. Scareware, where an alert is displayed claiming to detect a virus and a user is directed to send money to resolve the problem. The cost of ransomware attacks can be steep. In 2019, the city of Baltimore was attacked and reportedly spent $18.2 million in recovery. The average ransomware cost $200,000 and many did not recover and shut their doors. And in 2021, the average ransomware paid was over $136,000, and the most common payment was $10,000. What are the benefits of a cyber insurance? The loss, compromise, or theft of electronic data can have a negative impact on a business, including the loss of customer and revenue. Businesses may be liable for damage stemming from the theft of third-party data. When cyber attacks like a data breach or a hack occurs, they can result in devastating damage. A business must deal with business disruption, lost revenue, and litigation. It is important to remember that no organization is immune to the impact of cybercrime. The benefits include, but are not limited to, data breach coverage, where in the event of a breach, organizations are required by law to notify parties. This can add to overall data breach costs, particularly as they relate to security fixes, identity theft protection for those impacted by the data breach, and protection from possible legal action. Business interruption loss reimbursement. A cyber attack can lead to an IT failure that disrupts business operation, costing organizations both time and money. Cyber liability policies may cover the loss of income during these interruptions. What's more is increased costs due to business operations in the aftermath of a cyber attack may be covered as well. Cyber extortion defense. Ransomware and similar malicious software are designed to steal and withhold key data from an organization until a fee is paid. As these attacks increase in frequency and severity, it is critical that organizations seek cyber liability insurance, and which can help recover lost revenue related to a cyber extortion event. Forensic support. Following a cyber attack, an organization will have to investigate to determine the extent of the breach and what led to it. The right coverage policy can reimburse the insurer for the costs related to forensic and seeking out expert advice. Additionally, some policies can provide around-the-clock support from cybersecurity specialists. And lastly, legal support. In the wake of a cyber incident, businesses often seek legal assistance. This assistance can be very costly. Cyber liability insurance can help businesses afford proper legal work following a cyber attack. Should organizations make cyber insurance a mandatory requirement or not? Different businesses have different needs when it comes to insurance because of the types of data and transaction they handle. Large enterprises may be able to recover from a large data breach. However, small businesses may be forced to close their doors due to a small attack. The added cost to a company would be most likely trickle down to their customers, raising prices. Government mandates would eventually include additional rules aimed at protecting the insurance companies that cover the risk, which could work to the detriment of the companies. In addition, a government mandate means a burden on the taxpayer and who will have to finance another layer of administrating monitor for violations and to take enforcement action. How can an organization determine the need for cyber insurance? Cyber risks are complex and require a comprehensive assessment of an organization's data, network assets, and employee practices. When you're evaluating insurance policies, determine whose data you are protecting and to what extent. If a company does not deal with a lot of outside data, the policy they enact may be just internal. One such exercise that may help would be identifying digital assets. Identifying critical data assets such as production, hardware and software devices, employee workstation, and communication devices. And also identify vulnerable data such as who has access to what and when, employer customer records, research and development data, and financial reports. The following are going to be important factors to help determine if cyber liability insurance is right for an organization or entity. Targeted industries. Cybercrime impacts customers and organizations across the board, but certain industries are targeted more often than others. By analyzing the prevalent patterns in cyber incidents within their industry, organizations can reasonably assess the likelihood that they will be attacked in the future or even attacked again. Customer and company data. The probability of an organization being attacked increases with the value of its data. Organizations with high value data should assess the risk of a data breach and consider using cyber liability insurance to mitigate those risks. Network access. Organizations that allow users to access the internal network from the outside are more vulnerable to cyber attacks. Strong internal and network security can reduce the risk of a breach. However, even the strongest security plan can be breached if an attacker can gain access to an unprotected computer or device used by an outside user. Cybersecurity budgets. The need for cyber liability insurance depends mainly on the strength of the existing security investments. Organizations with considerable investments in their cybersecurity plan, including the additional cybersecurity executive to their upper management. The risks are not limited, however, their cybersecurity and cultural measurement can make it much more difficult for cyber criminals to breach their network or succeed in defrauding their employees. Financial stability. Organizations considering cyber liability insurance need to assess the potential cost of a cyber attack. Those companies include long-term damage to the brand, interruptions of business operations, or the loss of business partners. And lastly, cyber risk assessment. After evaluating the factors, if it is determined that cyber liability insurance may be needed by the organization, the next step is to decide on what type of cybersecurity insurance is needed and the amount of coverage. Oftentimes, the best way to conclude which coverage is conducting a cyber risk assessment, oftentimes by outsourcing it to third party. These are the references I used in this video. Thank you, and I hope you enjoyed it.